Hey everybody, so just a really simple video here. I know a lot of companies are going into this penny stock status. So what's happening with a lot of these companies is that they're going to start getting these notices from Nasdaq saying, hey, you have to comply to these rules, otherwise you're not going to be able to list on our exchange. So I just wanted to quickly talk about some of those rules here. And let me just zoom in on this page so you guys can see a little bit better. So here we have the continued listing standards for the NASDAQ. So essentially, they need to meet all of these standards within one of these tabs. So they need to meet the equity standard, the market value standard, or the total asset and total revenue standard. Now, the one thing that's uniform between all of these standards is this minimum bid price of $1. So essentially, if a company's stock goes underneath $1 for 30 consecutive periods, they are going to get this notice from the NASDAQ saying, hey, you need to comply, otherwise we're going to kick you off the exchange. And I'm going to show you what that looks like. So we go on Webull right here, and we're looking at this company. It's called MindMed. Now, I forget what this company actually does. I just remember it was very hyped for a second. And, people were buying it up like crazy. But as you guys can see now, it is down into penny stock status. And it's been underneath $1 for a minute now. So when I go to the SEC filings, and you can find the filings on many different websites. You could go to the SEC website itself. You could go to this NASDAQ website, or you could just go straight to the company website and look for the filings there. So what I look for is this 8K, which is basically talking about some sort of event that happened. So when you see this 8K, it's basically just an event that investors should know about. So here it says item 3.01, notice of delisting or failure to satisfy a continued listing rule or standard and transfer of listings. So here it talks about listing rule 540A1. So if we go back to this right here, 540A1. So that's basically these standards right here. So it's not meeting this equity standard. So now we could read into this a little bit more. It says, let's see right here. For continued listing on the Nasdaq Capital Market as the minimum bid price of the company's listing securities was less than $1 per share for the previous 30 consecutive business days. So also what they're saying is that for the company to regain compliance, then their security must close at $1 per share or more for a minimum of 10 consecutive business days. Now, the other thing that they do mention is that the company can give written notice, and they could get an additional 180-day extension. And what they can do to avoid this, as they mentioned here, is that they could do a reverse stock split if necessary. So if they do give written notice that they are going to do something about their share price, possibly a reverse stock split, they'll give that additional 180 days. So if your company is trading underneath $1, what you're going to want to do is you're going to want to go into those SEC filings. You're going to want to look for that 8K, and you're going to want to read what they have to say. So I hope this was helpful to you guys, and definitely have a good one.